For many of us, the challenges of COVID-19 have had more than just an impact on our physical and mental health, but also a significant impact financially. Given the unprecedented event we are currently dealing with, several questions may arise about financial security. Join us today with Anthony Katakuzinos to find out more on how you can manage your finances.
It gives me great pleasure, as always, to introduce Fred Skovic, our Head of Department at Psychology at PsychTimes School. And then we really are lucky today to have with us quite an expert in our financial field, Mr. Anthony Katakuzinos. A lot of you may know who he is. He has been on the Sahiti board as the treasurer for the last 10 years. He's also been extensively involved with Standard Bank over the last 20 years. In various different departments, heading up offshore investing. He served as the MD of Standard Bank Unit Trusts. He served as the COO of Stanlib Retail, and he's currently a non-executive director of FinSwitch and independent trustee of the South African Independent Pension and Provident Funds. So thank you so much, Anthony. It's really amazing to have someone of your talents, of your caliber with us today. And I'm sure that a lot of our listeners and viewers will benefit from the discussion that we're having today on some of the financial implications of COVID-19.
Thank you, and thanks for the invite.
So Anthony, I think a good place to start is just to think about where we are in the world at the moment. I think, needless to say, a lot of people are experiencing financial worries and stress, and I think there's a very close connection between psychology and financial health. You know, the three internal obstacles for financial health very often is that anger, fear, and shame. And we're seeing this really playing out with a lot of people, that anger of why am I in this situation financially, and you know, why should I be in this situation to make difficult financial choices? And very often from that comes the fear of what's coming and what should I be doing. And what we also see is the shame, you know, that people when they go into that space, they don't do anything. And I think this is one of the reasons we're so happy to have you here, to just give our listeners a bit of a better perspective, a broader perspective on how do we actually manage, you know, the crisis that we are in and financial implications. So certainly before our chat, you agree that the financial stress, we're definitely seeing it with some people.
Yeah, I think we're seeing a lot happening. And before we get to that, just to cover some compliance issues, I just wanted to let you know that this is not regarded as advice to all the listeners. I think it's important that all I'm going to do is give you some ideas and thoughts of how to tackle the problem. And you need to then just talk to some of your financial advisors or bankers to help you in this process, or accountants in that process. But yes, Fred, I think just getting on to that, I think we've seen our world turned upside down in the last 3 months. You know, if you think we were in a tough economic situation anyway, coming into January, February this year, from a South African point of view, then all of a sudden, rules came out that we had to close our doors, shut our businesses, sit at home for 5-6 weeks and do nothing, has destroyed many people's lives in the process and impacted them hugely negatively in this process. And part of that process is it's all economic. You know, so the South African economy and the world economy has come to a total standstill for 6 weeks, which has never ever happened to this extent worldwide ever. That this has ever happened. It's always happened in pockets, and even the financial crisis, which was quite a big crisis 10, 12 years ago, was focused more on a sector of the world economy, but restaurants and everything else were still open. You know, hairdressers were still open. Yeah, we've shut everything on that side, and it does lead to huge impact. And unfortunately, we are going to see a loss of jobs. We're already seeing loss of jobs. We're already seeing businesses having to retrench or part pay or things like that. So the financial stresses are going to build up tremendously on that process. And it will take a while to come out of this process and get to a point of some type of normality. I would like to say back to normal, but I think the extent of this problem and the challenges we face with this problem is we're going to have a new world when we get back to some type of normality. It will be a new world. We'll be doing things very differently. We're already seeing it in terms of the way people are doing business. And unfortunately, it's very sad, but we're going to see some of our friendly businesses that we usually go to won't be there on that side there. And so those are the challenges people face. And I'm sure there are a lot of people that are feeling distraught at the moment. And then, as you said, the psychological impact is you start landing up in panic mode, and what you got to try to do is stay calm and look at the situation and say, well, how am I going to work my way through this problem?
So maybe that's a really good place to think about sort of going back to grassroots level. I think if like me, you might never have done a budget, now might be as good a time as any to start with something like that. What could be some of the ways in which we could plan around this or think around how to manage this a bit better?
So I think, people normally, if there were two people working in a family or whatever, the money was coming into a bank account and they'd sort of have some idea of how much is there and spend it. But things might be different now. Some people might not be affected at all at this stage, but it doesn't mean you mustn't do a budget, because who knows what will happen in the next 3-4 months. And a lot of people have been impacted, whether they're only getting part salaries or, their businesses are closed. So it's important that you just try and stay calm, sit together and put down on a piece of paper the items that you think you need to spend month by month for, say, the next 3-4 months. List these items out and list them out as everything that you think you have to spend, and try to do just the have-tos, because you're trying to see how much you need as a minimum to carry on. And then also list all the contractual aspects that you've got. So you might have a life policy, you might have a debit order with an investment, you might have a debit order for medical aid payments, and pension payments and things like that, retirement annuities. List them all out. It's important to do that so you can get a picture. And before you start jumping in and saying, oh, let me just cancel this policy and cancel that and cancel this, without understanding the implications. And maybe you can, you don't have to cancel all these things. We can carry on with some of them, which are quite important on that process. So I think that's the first thing, Stephanie, that we have to look at, is put that down and look at it, and then start saying, okay, if we work out that it comes out to 20 or 30,000 rand a month, and you're seeing that potentially you're not going to have that amount of income coming in, then we need to start looking at those items and saying, well, what do I do on that aspect there? And there's a couple of things we can look at from an individual. Is, as I said, look at your short-term cash. You need to look at your short-term cash that you're sitting in the bank, whether it's a fixed deposit, call account, and something like that, money market funds, and say, well, how much have I got there? Because you've always put that aside anyway for short-term emergencies, and I suppose today is an emergency in the current environment. And say, well, how much will that carry me? Will that carry me for a month, 2 months, 3 months, hopefully for longer, as a starting point to say, well, that will give me comfort that I don't have an immediate problem, hopefully. And then we start looking at, okay, so now how else can I start cutting that expenditure so that I don't have to eat too much into that saving and make it last longer? And also then once that saving runs out, that I can still continue in terms of trying to keep my life going. And you'll start off with your short-term type investments. So if you've got unit trust, I think the first thing is don't cash them in. Don't cash them in. It's not the time, and only if it's really an emergency would you actually start looking at dipping in. But maybe what you want to do is contact the company and say, can I have a payment holiday on my debit order for 3 months or 6 months? Or if they don't do that, say, well, can I cancel the debit order, but keep the investment? Don't cash in the investment at this stage, because you will still need to build up savings for over the next few years for your retirement or whatever else you want to do. And you don't want to get to a point where you get to retirement, you don't have enough money. And unfortunately, a lot of South African society don't have enough money at retirement age. So you're trying to avoid that as well. So you've got to look at the long term and the short term while you're in the situation. So step by step, follow a process. So let's try and see if you can stop maybe the debit order flows. You look at your retirement annuities as well. Phone the companies and say, can I do a payment holiday on some of those retirement annuities, but don't can't cash them in. Unfortunately, some of the life companies have penalties on that side, so you're just going to have to work through your financial advisor and see what they've come up with. However, a lot of the financial institutions and the regulator have stepped in the last couple of months to try and assist where they would normally have provided had a penalty, but now have said, well, we'll waive those for the next few months if people come through and need assistance and things like that. You will then look at your bond. If you look at your bonds and see if you can afford your bond still, and if not, the banks are offering payment holidays on some of these. So what does it mean? Is that they won't write off your loan, but what they might say is you don't have to pay your bond for the next 3 or 4 months. Look, it's something that's not ideal, but at least it'll help you through the process. Why? Because the interest will still be charged on your loan, and the loan will keep on growing still. So you don't want to do this for too long in terms of that aspect there. But there are some schemes supported by the government in terms of with the banks where they are looking at assisting people where they can have a payment holiday for 3-4 months to help get through the crisis on this process there. On that side there.
One of the risks with that, Anthony, is of course that although you might have that immediate sort of short-term relief of that payment holiday, which is probably beneficial in the long run, long run that sort of capital, that repayment will grow, and it takes longer to repay it essentially.
Yeah, that's exactly it, Stephanie. So, it's something that you don't want to, if you can avoid it, try and avoid it. But it's there to help you for a couple of months. So but it's there if you really need it. But it does extend the length of the loan quite a lot.
You're of course paying a little bit more.
You'll end up paying more for longer, unfortunately. But it's there to help you. Medical aid is something you need to be very careful about cancelling. Especially in these distressful times. Sometimes you say, "Oh, it's so much money." But, the problem is if you land up with a severe crisis or you land up with this disease and you land up in a private hospital or ward, the costs are huge in private hospitals in terms of this. Or if you end up with a heart attack or a stroke or something like that, you want to make sure that you can still afford it. Because if you can't and you don't have that medical aid, the stress on the family will be even larger. So you don't want to do that in that type of situation. What you can try to do is look at the different packages of medical aid and say, okay, I'm quite willing to give up the short-term expenditure of paying for medicine and cough mixtures, things like that. Maybe I'll just pay that out of my pocket if I can. But I still want to make sure that if I have a major disaster and land up in ICU for whatever reason, that my medical aid will cover you. Unfortunately, if you land up in ICU for anything, you're looking at 200,000, 300,000, 400,000 rand of medical bills before you're finished, and you don't want to have that not covered if you can avoid it. So be careful about that. The same with life policies. Again, go to the life companies. Some of them are offering payment holidays on their life policies on that side there to avoid it. It's a good time to look at your short-term insurance. To look at your policy, is it covering the right things? Can I trim back some of it? Can I put a few excesses on just to cut some of the expenditure of short-term insurance? Phone your short-term brokers and see if you can renegotiate something and lower the actual monthly amount. But again, be careful about this cancelling short-term policies, because if you cancel your policy on your house or your car and the house burns down, what's going to happen? Or if you have a car accident, you'll end up hitting a very expensive Mercedes-Benz or something like that. The financial stress will be worse in that situation there. So those are the things you've got to think about when you look at those things. But you've got to start somewhere, put them down, and you're going to work through each one about how you can trim them back without impacting you hugely negatively.
I think that's been really useful, because for someone who's probably not financially savvy like me, all I do is probably spend money. You want to know that, and that you considered, the pros and the cons of both options. I think a lot of us instinctually feel like, we need a little bit of respite. What can we renege on in terms of certain payments? But at the end of the day, they all appear to have some risk that they carry with them as well. So I guess it's important in times of stress to also remember that something that might look like an immediate relief or option for relief might carry with it some difficulties as well.
Anthony,
Yeah.
I'm quite curious about I'm quite curious about small businesses, and many of our parents do have businesses, and there's so many things to consider around taxes and UIF, etc. Could you say something more about some ideas that you've got in terms of how they can manage these?
Yeah, so it's terrible. Small businesses have been very hard hit in terms of the process of being closed down. A lot of them have worked on a month-by-month basis, really, in terms of how they've worked. And built up huge amounts of excess capital to actually handle situations like this. So a lot of them are under serious stress as well as a business, and I'm sure it's stressing the owners. But there has been quite a lot of processes put in place by government to try and help in this situation. One has been from SARS, where SARS has looked at provisional tax payments being reduced and spread for longer periods of time. Talk to your accountant who does your taxes on you and what can be done to assist you maybe from a cash flow point of view. Also VAT payments. They've actually looked at the monthly and bi-monthly payments from VAT that you can actually not pay the full amount now. It will still be owed in the future, but to help you from a cash flow point of view, you can pay a portion of it. Again, talk to your accountant about how you go about doing that in terms of reducing that amount. Then from a financial point of view, from banks, the banks and government have put a package together where businesses can go and apply for loans at the bank at favorable rates. So where in the past they looked at each business and then this business is more risky, they charge them quite a lot, and this business is less risky, they charge them less. What they've done here is they've got a uniform package now at a reasonable rate, which government is underwriting and guaranteeing the banks any potential losses or most of the losses on that side there, that you can get a loan from the bank to help you through this difficult situation. And you got up to 5 years to pay it back at reasonable rates as well. So there is that to look at. UIF is another issue where the government stepped in terms of you can apply for some UIF claims to help assist pay some of your laborers if you do have some. However, it is a complicated process. There is some confusion with what they said they would pay, because they said they would pay 6,730 Rand. Everyone thought that if my employee is earning 10,000 and I only pay him half, I can top it up with the UIF. But it's a little bit more complicated that they apply in some type of percentage formula to it. Again, talk to your accountant about it. There is a bit more information out on the South African Chartered Accountant website on how it works on that side there from a UIF point of view. So those are the type of things that businesses need to look at. Again, they also have to look at budget seriously, line by line, and go through it. And unfortunately, have to start making some tough calls about it. It is very sad of what's happening out there. People are being retrenched and things like that. But as a business owner, I suppose the first thing is to say, how do I get my business to survive through this process? And from then rebuild. And you will have to make tough calls. And the sooner you make it, the better from a cash flow point of view, from that point of view.
Oh, so Anthony, I'm very curious to hear your thoughts. Are we going to get through this? What do you see in your crystal ball?
We will get through it. I think what you're going to see is a lot of negative results and information coming out for the next 12 months until June next year. Because it's a rolling 12 months that the financial results will come out. So you will constantly see companies coming out with halving of profits, reducing dividends, not paying dividends. And unfortunately, some businesses going into business rescue and things like that as well on that side there. But then what will pick up is in 12 months' time is, for the first 12 months, you'll see negative returns, minus 6% GDP growth, things like that. Big numbers we haven't seen before even through various crises, and that does have a negative impact on us. We need to try and stay positive from that point of view, because in 12 months' time, all of a sudden you're going to see what will seem like a miracle, because all of a sudden you're going to see 6 to 12% positive growth figures, but they're coming off such a low base, and they're high. But they're projecting from July next year that all of a sudden America, Europe will show 4%, 5% positive growth in GDP, and even here we'll even show like 3-4% positive GDP. But bearing in mind it's come off a base that was smashed quite badly on that side. But the psychological impact on us is huge in terms of the negative aspect and how to work through it and get to that point where hopefully the positive impact will start coming through after that. So yes, we have to work through it and have to see how we can survive for the next 12 months through this process in terms of making sure that we can come out of it okay. Just talking about the psychological aspect of finance, you often find people perceive a 10% drop in a huge negative impact versus a 10% or 20% growth figure, which they say, that's very nice, but I expected that. So the psychological aspect of downward numbers is much more emotional than the positive numbers coming through, and that's what we just got to remember. How do we just keep that under control, not get too panicky, and see how you work through this process. And talk to people,
relate to that.
Talk to your bankers, talk to your accountants to help you through this process.
I can relate to what you were saying, because I'm quite sad that I'm not able to cash in on the low petrol rate at the moment.
Yeah, we got this low petrol rate, but we're driving nowhere.
Not going anywhere.
I think also
that the interest rates has gone down a bit to kind of tide things over a little.
Yeah, I think it's another good thing. I mean, we've seen a 2% drop in interest rates in the last 2 months. That's going to help a lot of people that have borrowings. And we're anticipating probably another 0.5% or 2.5% in the next 2-3 months. From that point of view, that will help further from a cash flow point of view. I think also from an investments point of view, a lot of people saw their investments dramatically fall. People will be getting their March statements, which is a quarterly statement, which will be a terrible number because the markets actually dropped, and the low end of the market was just before March on that basis. But if they look now and try and go and work out what the price is today, they'll see it's actually jumped back 20-25% already from that point of view. So therefore, don't panic with your investments, especially more investments in markets. They do go up, they do go down. It's normal for them to go through these type of things. It's the wrong time now to cash out when they've already crashed. On that basis there, you need to sit on those investments and they will come back and grow in time as well on that side there. We are anticipating, I think we've seen a very quick recovery in the markets lately, which is unusual. It's been the quickest comeback in any crisis in the last 50 years. And it's caught a lot of the experts also surprised, saying that they knew the market would bounce back, but not so quickly. The only thing is, what you could see is that it could correct a little bit down again. So what you do is you get this W effect, and then come back a little bit later. And I think it will do, I think personally, that's my view, and it's not advice, I think it will come back a little bit, drop about 5 to 10% again. The reason being, you will start seeing the negative results from companies start coming out in the next 2 to 3 months, and that will have an impact on investors getting nervous again. But just be careful about getting too nervous. Rather, hold on to your investments, and we'll come back. But we also seen the rand crash dramatically. We saw it move for about 30% plus on that side. But we have seen in the last 4 weeks the rand improving. It's actually done quite well this month, and the end of April coming back. And the views are from the experts like Rand Merchant Bank, Investec that I've seen, and that's their views, is that they will see the rand continually improving by another 10-20% over the next 12 months. Before you start seeing maybe a further depreciation after that, but it will come back for the next 12 months. That's what their views are, and we have seen that in previous crashes and crises with the rand. That's what it typically does, and then you might see it then carry on its normal journey after that on that side. Unfortunately, as an emerging market,
we might keep our money to the side for next year's overseas trip.
Yeah, I think
Not this year.
we'll be cancelling all expensive trips this year. First of all, I don't have an airplane to catch. On that basis, they're all grounded and they're unlikely to be taking off from South Africa for another 3-4 months, which some very good businesses like Comair badly. Just but hopefully, they'll be able to work through it and survive through this process.
Anthony, I think you've given us so much to think about, and I'm definitely going to knock on your door again for just really insightful, a conversation. Thank you so much for your time.
No, thank you, Fred. Thank you, Stephanie. And hopefully I've helped the people just, think about how to tackle this problem. And all I say is don't panic and talk to people, talk to your friends and financial advisors to assist you through this process.